Well, the IMF is saying we're going to have a V-shaped recovery, down like that and up like that. Another big leg down for the stock market. Is that a possibility, or do we rule it out? And finally, the stocks you should own if the market is going higher. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. You weren't very mad then, Paul. You were very...
No, I was very polite, Peter.
Yeah, very restrained. Is it because you're worried about the V-shaped recovery?
Well, all I always say is the IMF has never been right yet. So anything the IMF comes out with, I mean, I think you have to take with a pinch of salt, Peter. Yeah. That's probably the first statement I make.
That's probably overcommitting a resource to the IMF.
I'm surprised growth is only going to fall by 6% this year. I thought it'd be more this year. And look, the V-shape, U-shape, L-shape, just explain what the difference we're talking about here.
Right? So let's look at the case of the IMF. They think we're going to, this year, 2020, we drop by 6.7%, but then in 2021 we go up by 6.1%. So it's up and down. Now, a U-shaped recovery or rebound recovery would be down and then slowly around the bottom, and eventually you come up. There's also L-shape when you go down and you go sideways for a long time. The GFC was a bit like that until about March, and then it started to go up.
Yeah, I think people forget how long the GFC went for, Peter. It really started in late 2007.
November 1, I think it was.
Yeah, and went all the way through to March 2009. So it was actually 15, 16 months. Yeah. In fact, we actually had a bigger second market fall than we had the first market fall.
We sure did, when Lehman Brothers failed, yeah.
Which doesn't quite bring us to the next point, but does just question about how quickly we bounce out of this. I mean, I don't disagree with the fundamental the IMF's assessment, down 6 this year, up 6 next year. I think it'd be probably good more on the downside. I'm just not sure it's straight back up. I think it's still more likely to be more, so I'd say halfway between a V and a U. Is there such a thing?
We call it a VU.
A VU.
A VU.
Right.
Anyway.
They don't get the L-shaped one anyhow, right?
Yeah, okay. So I think the next question is kind of related to that. Will there be another big leg down? Let's give the history, Paul, is that usually bear markets have 2 big legs down. As you pointed out, GFC, the second one was bigger than the first. So could this be different?
Well, every time is different. We always have that argument. I mean, but look, let's go through why you would expect another leg down. I mean, first of all, as you say, history says that. That's what normally happens in bear markets. Yes. Secondly, markets get ahead of themselves, and more information comes out. The disruption goes on longer, whatever it is. Yeah. And thirdly, Peter, this has been so quick. I mean, this has been a savage down. I mean, this has been a much bigger down than we normally get.
Yeah, in a short space of time.
And almost a savage back up. And, questions now whether the US is sort of out of bear market territory back into bull market territory. I mean, Amazon last night hitting an all-time high.
Yeah, I think the point we'll make is that the stock market currently believes that the containment period is going to be shorter than was expected. That's a good reason for the market going up.
I hope they're right.
Yep. And they also believe that US will be over a lot of its infection problems and death problems by the end of April, and things will start to improve. Put all those together on top of all this fantastic rescuing from governments and central banks, it all adds up to being a reason to believe that this market will go higher. But I would still argue, Paul, I don't reckon there'll be another big leg down unless it's a real surprise piece of bad news. But I still think there could be some down days.
I think there have to be some down days. Look, I agree with you, Peter. I don't think there's necessarily another big leg down. Yeah. But I don't think anyone yet knows how we're going to recover. Even in the US, look, they're still talking about whether it's Donald can order it or the states have to order it, and the question mark, clearly the power probably lies with the states. But no one yet knows how they take the break off. Yeah. And that's the big question. That's the big issue for business. So when we're talking about recovery, how long are profits and revenues going to be hit by? Is it just a couple of months, or is it 6 months, or is it 12 months? Is it 18 months?
That's the beauty of the stock market.
And until we get a little clarity about the recovery, I think the market's going to have a little bit of trouble sustaining this rally.
Yeah, me too. All right, so finally, the stocks that you should be buying.
Well, I think this hasn't changed, Peter. This advice still is stick with the large cap stocks. They're going to recover first. They're arguably the least impacted by this too, Peter, because where this is hitting is typically down in your lower ranked companies, in companies involved in the industries, travel, tourism, hospitality. They're the ones being forced into raising capital by the market. Some of your major caps, your resource stocks, your BHPs and Rios. Your banks are going to be hit, but they've been hit already. So I think this is still stick with the large caps. The market always go large cap first. They don't have. No one has to own small cap companies. So I think they're going to be the laggards in this. I don't think anything has changed in that sort of basic advice. I also caution about jumping back into the companies that are directly exposed. I don't think the travel industry is by any means a big buy, because I don't think anyone knows how long this is going to take, but also what the changes are. I mean, it could be that, for example, in the airline business, we just don't get to see the same sort of domestic travel because businesses have got used to using Zoom and all those other things, and say suddenly we don't need to go fly between Sydney and Melbourne to have meetings anymore, right? It could be in the overseas travel market. There's all sorts of changes. Some destinations simply won't reopen because governments won't let you. So there's a lot of uncertainty to play out there. I think they've seen some recovery in those stocks. I think they're the ones still to stay out of.
I think if you went and bought companies like Webjet and Flight Centre, over a 3-year period, they probably will rebound. But you're going to have to wait a bit before you get the really.
But the time to buy them probably wasn't the capital raising, Peter. So there still are some offers for retail shareholders there. That's the time to look at it, but I wouldn't necessarily go into the market, I think, for those stocks.
Okay, well, I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.